To go further in depth, we're pleased to be joined by Robert Wiedemer. Robert's the author of the book Aftershock, Protect Yourself and Profit in the Next Global Financial Meltdown. Robert, it's so good to have you back here on America's Forum as you Skype in with us this morning from Washington. Do you agree with Alan Greenspan, or is it even worse than Chairman Greenspan says, given his penchant for understatements?
Well, his penchant for understatements and penchant for, let's just say, covering has been a lot less now that he's no longer Fed chairman. So he's kind of, I think, speaking more truthfully and less covered at this point than I certainly saw him when he was actually Fed chairman. You've got to keep in mind that a Fed chairman's role is not necessarily to speak the truth, but to sort of boost up people's spirits. But I agree with him, and I agree, though, that we are probably the best in the world, but it is definitely sluggish.
Robert, Greenspan said the economy won't fully recover until American companies invest more in productive assets and the housing market bounces back. Do you agree with him there?
Boy, that sounds like what I say, is that what we're really not getting is that kind of investment we got earlier. We're getting a massive amount of buyback of stock, a massive amount of investment, I guess, in pumping up asset bubbles. And housing, I think, is critical. I mean, as good as housing has rebounded, let's keep in mind that housing construction, dollars spent on housing construction is about half what it was in the peak. And it's not just housing, but even hospital construction has flattened out. Office construction still down about 20–30%. So a lot of those basic elements of the economy, like housing, simply aren't doing that well.
Robert, in the 2 minutes that remain, I'm going to step away from economists with their forecast to the reality of motorists going to the gas pump. A lot of people very pleased that they're paying less per gallon of gasoline. What is the long-term implication of that in terms of the well-being of our economy?
Well, I think it's all positive. I mean, it's not just drivers, but oil is clearly a part of everything we buy in reality, and so low oil prices are a plus. What's interesting, though, is they didn't have quite the huge impact on consumer spending that a lot of people expected around Christmas time. I haven't seen the final figures, but it doesn't look like Christmas holiday shopping was all that particularly strong this year, and a lot of people thought we'd get more boost out of that than we were getting, even though gas prices had dropped dramatically. I don't think those gas prices are going to rebound looking forward. They might go back up a bit, but I think it will remain a positive impact on the economy. But interestingly, it's not being felt yet, certainly not on the retail level, it seems like.
Robert, in the 20 remaining, real quickly, what economic indicators concern you the most?
I guess household formation, which is a real fundamental figure, is still lagging tremendously where it was before, and that's such an important driver of buying furniture, buying homes, and a sign that our young people are stepping up in the world and earning more money and feeling more confident and forming households and getting jobs, getting good jobs that can support new households. That's probably one of the most important ones to me.
Fair enough. I love that concept, household formation. Wish my kids would take it up at any rate. Robert Wiedemer recently recorded a video explaining why we might see a market collapse. You can see that by going to aftershockinfo.com. And once again, the name of the book is Aftershock, Protect Yourself and Profit in the Next Global Financial Meltdown. Our thanks to Robert Wiedemer for his assessment of the economy, and there is more to come in this first hour of America's Forum, so please stay with us.